Let's bring in Jeff Kilburg, the founder and CEO of KKM Financial and a CNBC contributor. Jeff, I'll start with you. We always watch the chips for two reasons right now, because the AI trade has been one of the more sure things in a tough market. Also, it's typically a leading indicator. And if we're running into some cyclical slowdown, you got to wonder about that. So how are you positioning?
Well, I'm a little more optimistic than most, but semiconductors, I don't want to call them a safe haven, but look what they've done this year. If you look at SOX, which is a very popular ETF for semiconductors, and you see up about 14% year to date. So I get excited about some of the individual names. Intel, you just talked about Broadcom and Google. You could equally talk today about Intel and Tesla and XAI and the Terafab. So everyone's kind of racing towards the semiconductor space and making chips inside. So I look at some of the names, and we manage our Mango Growth ETF, ticker symbol Gary. We've been able to dance between the raindrops. That's why we're up 6% year to date when growth has really been repriced. If you look at the Mag 7, repriced in general down about 15%. So think about some of the names. I know Micron's a favorite name. We also talk about Applied Materials, Lam Research. These are names that you have to be tactical in. But I look at Intel for the first time getting above $53. There is some more room to run, specifically in Intel.
And you said you're more optimistic than most. What's your thoughts, Jeff, on kind of the whole AI trade? Do you stick with that segment of the market? I mean, in ARM's case, they're having a little bit of a problem from the memory shortages. Do you still like the memory names?
I still like memory, but let's just look at the dispersion, Kelly. If we look big broader, take a step back, this has been the most unusual dispersion. We've never seen S&P 500 sectors with 50% dispersion. Obviously, energy leading the top end, financials on the bottom there. But what we have is dispersion inside of tech. Software has been repriced, somewhat could argue decimated, but I think semiconductors and being considerate of what is going to move forward the AI race. We don't think AI is going to be lagging. We love the fact that the valuations across the board have come down in the NASDAQ 100, but you still have to be a stock picker here. There's a lot of noise. Obviously, we have to get through tonight, 8 p.m. Eastern. Everyone's going to be looking at their watch, but I think bigger picture earnings season is going to be much better than expected, and we're on our sixth potential consecutive quarter of double-digit growth. So I have a little more enthusiasm. I know people are kind of cheering the market goes down a little bit, but I think the market's come down far enough, Kelly. It's time to buy.
What about that inflation concern? And, inflation's such a loaded word. This is different than 2022. This is really a price shock in a couple of particular areas affected by supply shortages, where that one we had fiscal stimulus, we had monetary stimulus.
That's right.
This time's a little different. It's more like a tax, which raises the. So we have both this kind of price shock inflation concern and a slowdown concern at the same time. Are you dismissing those?
No, I can't diminish that. There's pay at the pump right now, national average above $4. Remember, in 2022, the national average was over $5. So this isn't new for the consumer. But what is interesting, when you look at crude oil at $115 a barrel, that duration is going to have an effect. However, everyone that was talking about the effects that tariffs were going to have just a year ago, they never came to fruition. We didn't see that inflation. So I'm kind of in the same camp. As long as the off-ramp to Iran is in place in the next week or two, we have the ability to kind of make this a blip. If it goes further than that and we see WTI crude oil stay above $80 or $90, yes, Kelly, that's a problem.
Okay, so in the next week or two, above $80 or $90, those would be more of your watch points for now.
Yes, I think we break $90 and it's kind of the all clear. We talked about that last week, but we see nothing but crude oil stay elevated. And yes, that is a problem for inflation. It's a problem for economy. It's a problem for the consumer. But I do think that there's some offsetting tailwinds. Lower interest rates are coming with Kevin Warsh. Don't know when, but they're coming. We also see an earnings season that's going to really, hopefully, knock the cover off the ball.